Hey everybody, welcome to Trading Futures with me, Anthony Crudele. We have an awesome show for you today. I will be joined by legendary trader Larry Williams, fitness expert Kate Lemere, trader and performance coach Dan Hodgman, and last but not least, futures trader Dani Sittloh. Welcome to Trading Futures. Larry, how are you, my friend?
Great, Anthony. Good to be with you.
Thank you so much for joining me. Yeah, I'm looking forward to it. Same here. So Larry, 57 years as a trader. Can you share with us some of the keys to sustaining such a long, successful career as a trader?
Keep breathing. Sure, I think really you need a lack of confidence, because if you get overconfident, you'll bet too big and you'll lose all your money. So to have an absolute fear of the market, I think, is very healthy. And not be overconfident and be it's a beast, and be afraid of the beast, and you can battle the beast. But if you think you can knock this beast out of the park every week, every day, I haven't been able to, and I don't know anybody that has.
No, I definitely don't either. Larry, we're going to talk about a couple of things today: cycles and commitment of traders. Explain to us what we're going to learn when we go to the charts about cycles.
Well, I think there are time cycles to how markets move, that there's lows every 4 years in the stock market, as a rough idea of it. And the things are cyclical in life. We have good times, bad times, hot weather, cold weather, and prices have a cyclical effect. And I think they tell us not the magnitude of the move, but when a move should take place. So that can be helpful. I have a pretty good idea stocks will start to rally the end of August, first part of September this year. So I can focus on that as a trader at that time to look for buy signals. So that's how I use cycles. They're about time, not magnitude. And the Commitment to Trader report, as you know, is a report published by the United States government every Thursday that shows what the small speculators are doing, the guys on the street, the funds, what they're buying and selling, and what the large users and producers, called the commercials, what they're really doing with real money in the marketplace. Invaluable insight. I've been using that, the first person, since 1973, and it's been a hallmark of my career to understand how big money comes in and out of the commodity markets.
Started trading in 1962, and today we're going to talk about market cycles and commitment of traders. Why are those two, they seem to be some of your favorite topics to talk about?
Well, cycles tell us when, but they don't tell us magnitude, as I mentioned. The Commitment to Trade report says, hey, these guys are really loaded up. They're heavily long corn or soybeans or whatever the market is, or they're heavily short gold. Well, most likely we're going to have a really good move to the downside. So it gives me the direction and the magnitude, because clearly you look back at the history of what large traders have done or what the commercials have done over the last 30, 40 years, they're almost always correct at a significant market high. So if I can know that, I know we're at a major market high or major market low, I can take an important position, because what I think is the key to making money, Anthony, is to have a small position and catch a large move. That way, if I have a small position I lose, I have a small loss. But if I have a small position, catch one of these big moves, I can make 10, 15 times my money. So I think that's really the mathematical formula that works in the market. Small positions, which limits your loss and has the potential for a very large gain.
Now, do you prefer cycles and commitment of traders over indicators?
Well, I use other indicators too. I'm what I call a conditional trader. I'm not a technical trader. So I look for conditions, cycles, accumulation in the market, what the commercials are doing, valuation in the market, supply demand in the market. And the difference between a stock and a commodity, people really need gold. We can't live for the rest of our life without wheat. You can live the rest of your life without owning a share of Amazon or IBM or Google. But this is real stuff, so we have real fundamental stuff that sets up a market. That's the condition for the move. Then I bring in the technical stuff for the timing of the move. Most people just, it's all technical. No, I think you have conditions, technicals, or timing.
Before we go to the charts, what is one attribute that you believe every trader should have?
Fear. You'd be terribly frightened of this and manage your money correctly. Never bet big. You bet big, you will lose big. So money management is the first thing that I talk with about people. If you don't manage your money correctly, at some point, you will lose your money. All of it.
You ready to go to the charts?
Yeah, let's do it.
All right, everybody. Next up, Larry and I will talk about cattle and corn. Stay tuned.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit learnfuturestoday.com to see what adding futures can do for you.
Welcome back, everybody. Larry is still with us. Larry, what are you seeing in cattle and corn?
Let me show you, starting with our charts, of course, and a cycle forecast of cattle. Notice that about every 6-7 months, we've seen lows, good buying opportunities in the cattle market. It looks like we have another one coming up, the end of September, first part of October. We should come into a cyclical low. Remember, these are timing areas. They don't tell us the magnitude of the move, but timing. If we want to get to the magnitude of the move, here's where I really like to use the Commitment to Trader report. What we're looking at is going way back to 2014 on a weekly chart. The green line shows what the small speculators in the market, and it happens to be in the meat markets. The small guys are really good. These are people that have cattle themselves. They don't trade in 100 contracts, so they're not registered as a larger commercial trader, but they've been, well, look, buying, market rallies, heavy buyers, market rallies, and they've just become buyers in the marketplace. So I think another reason, a fundamental reason to think that cattle prices can go higher.
So you find that that style works a lot better in eggs.
The small speculators work really well in hogs and cattle, not so good in the other markets, but they're producers. They're just small producers. So that's a setup condition. Then I can look at other setup conditions like crude oil, I think leads cattle prices because it's the cost of doing business. So does soybean meal. You've got to feed soybean meal. That's the largest feed for cattle as you're fattening them up along with corn prices. So we see we see that crude oil has been a good forecaster of what happens in cattle prices. We knew this point, 65 days in advance. So this is an indication cattle should continue moving higher, then get down into that September buy period that's coming up. So that's the way I can combine a couple of indicators to get a forecast for the market.
It's confirmation, right? So you're looking at multiple things, and then if they all line up, then you really have got something there.
When I was a kid, there was an ad for Anacin on the radio. It said, it works like a doctor's prescription, a combination of ingredients. And I go, that's how I should trade. I want a combination of things, not just a chart, not just this. I want a bunch of fundamental conditions that say it should rally, then bring in the technical stuff to say buy now or sell now. We can also look at the large traders in the Commitment to Trader report and open interest. Open interest is the total number of contracts traded. When everybody's really bullish, we're usually at market highs in the market. There's open interest very high, everyone's bullish, market declines. Everybody's really bullish, we get into market decline. Especially if, while everyone's bullish, the commercials are selling. This shows net long, net selling. If they're heavily short and the public is heavily bullish, markets decline. Currently, we're in a good situation. Commercials have been buying, open interest is coming down, and that caused the rally that we've seen. Let's take a look for a moment at corn, which I think is getting up for a sell signal in the market. We see the cycles in corn have been pretty dominant in this market. It's a good cyclical market. It suggests we're at a high and should continue moving lower. So I'm looking for short sales in the market, but again, I'll use the technical stuff to get in the short side. The cycles just say, look for a buy, look for a buy, look for a sell up here.
All right, stay here for a moment, because what I want to pick your brain a little bit about is you see this cycle, you see other confirmations, we'll call them, that are lining up. When do you then pull the trigger? Are you using technical indicators at that point?
I do. I confess to that. Yeah, guilty as charged. I will. I like to use my Williams percent R, which has been around for 50 years now. When the markets are overbought on a short-term basis, I think the market's going to go up. Cycle forecast. The market has a bit of a pullback in here. I want to be a buyer on these pullbacks as long as my belief is the market's going to go higher. We can look at our next chart and see, again, backing up how this works in the marketplace. If we look at corn, where we saw cyclical should go down, the small speculators in corn haven't been good, and we go back now to 2003. This is the longest position, the largest number of longs the small traders have had in 16 years. And the commercials, the largest short position they've had. And when they get heavily short the market, we usually see decline. So I think corn is setting up for a sell signal fundamentally, especially we see the small speculators are wildly, crazy bullish in this market. They think it's going to go up. They're usually wrong. So I want to look for sell signals in the market.
Let's also stay here for a moment, because what I want to ask you is how, let's just say you did get into this trade. How would you know you're wrong? How are you determining a stop?
Well, I'm losing money right away, which happens often. But when I get in the market, I really don't care about these price points on the market. I care about the money in my bank account and my trading account. So I don't want to lose more than a percentage of my money, about 4%. So that's the most I'm going to lose. So I have a dollar stop. I'm not going to lose. It's usually about $1,000 a contract, somewhere in that area. I don't want to lose a lot of money. So I have an absolute stop, and then hopefully a target the prices will go to.
And then do you trail stops along the way?
I do. If a market, say we're short here, it starts coming down, stop, lower the stop. Well, I'm stopped out, but I took a nice profit. So I may go to my target. I may not. I still need to have something to protect me from, I can be wrong. The trend has changed. I got to be careful of that.
Gotcha.
Another point about the small speculators that's really important is they're almost always net short at market lows. So when these guys are not interested in the markets usually rally. And it's just the opposite. When the commercials are heavily long and the small speculators are negative on the market, that's where we get big rallies in the marketplace. And that's true of all markets. It doesn't matter, except the S&Ps. All ag markets are driven by the commercials and the small speculators. Bless their soul, they're almost always wrong. So I pay a lot of attention to the wrong guys in the market, because if they're wrong, just do the opposite of what they do.
Great explanations, Larry, but we're not done yet. We have a few more markets to discuss, everybody. Next up, Larry and I will discuss gold, E-mini S&P, and crude oil. Stay tuned.
Why trade with Tradestation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at Tradestation.com.
Welcome back, everybody. Larry and I are still at the charts. Larry, show us what you're seeing in gold, crude oil, and E-mini S&P.
Let's take a look, as they say. We're going to start looking at the cycles in crude oil. It's been a very cyclical market. It's about a 90-day cycle in this market. You can see we have significant highs about every 95 days in the market, which means we've got one coming up around the 1st of August. Between now and then, there's a bullish bias to the market, but I'll be definitely looking for sells around the first part of August. As we see in the past, there's some pretty good money-making opportunities, but that's just about timing. That's all the cycles tell us. We should have a buy point here and here and here, buy point over here. There's a sell coming up, but can we back it up with something? That's more important.
Yes.
And we can do that with a couple of things. I've found that gold leads the price of crude oil. This is an overlap of just the price of gold extended a few days into the future. And as you can see, we knew there was going to be a top in the crude oil. We knew that about 50 days in advance. And I made a lot of money selling crude oil in here, as our friend Kushal will be on with you as well. Had a pretty good idea we would rally. So right now, we also see, the bullish bias based on this intermarket relationship is bullish until, again, about August. At that point, we'll be relooking at the charts to look for a short sale, a position in the market. I'm not a little in and out trader. I want to ideally sell here, buy over here, get out here. I'm a longer term player in the market.
What's your typical hold time?
Probably 3 weeks.
3 weeks.
Yeah, I wish it could be longer, and sometimes it's shorter. But the big money is made buying here and getting out there. That's a $100,000 move. In here, it's a $100 move. I'm playing for a much bigger move in the market. We can do that with gold. I think as the market is really getting up to be sold short. Look at the cycle forecast. Significant high, significant high. We're at a significant high in the gold market. A low about the 24th, 25th of October. That's a cycle forecast. All this stuff can be wrong, though. So I have to be prepared. We talked about in the last segment, I've got to have my stop losses, my targets, but I can back that up looking at the fundamentals in the marketplace. We've talked about the small speculators, right? Well, the small speculators in gold, we're going back to 2013. We're wildly bullish on gold at the peak, wildly bullish on gold at the peak, and again, they're wildly bullish on gold. So I think the small speculators will be wrong again, especially if I see the commercials, the large people that produce and use, the miners and the jewelers, are heavily short the gold market. In fact, that's the most short they've been since 2016. Most likely, market's going to go down, and that's the way to bet. It might not be the fastest horse in the race, but the odds are in his favor.
So you have all of these confirmations, once again, like we talked about in the last segment. Let's just say that we get to a point where you're going to take a short. How are you going to determine when you're going to get in, how you're going to determine your loss? What are some of the things you'd be doing?
Let's go back to the last chart. I've got a congestionary up in here, so really a breaking out above or below. I could use that as a trend change in the market. What I love to see is a pattern right here. The market has a big break, rallies back, and then has a lower short-term high here than here. I want to be a seller over there. That's my favorite entry technique on the short side of the market.
Oh, that's your favorite. Okay.
That's my very favorite. We can look at stocks for just a moment. My long-term cycle forecast, interesting, not based on stock prices, but on the advanced decline line, much smoother than stock prices. We talked about how erratic stock prices are. Well, we've got a good buy point coming up around the 9th of August, the first part of September. Well, this has been a strong 80-day cycle in the market, setting up buying points. We're going to decline now, but there's a really good buy point coming up, I think, around the 1st of September in stock prices. And we can see that based on the interest rate forecast, intermarket relationships, also suggest a dip into that September and then another move to the upside. So I use fundamentals and cycles to give me a leading indicator of what these markets are going to do.
How can other people get these cycles?
Well, they could do the work themselves, first of all. That's how I did all of it. Or a short circuit, come to our website, ireallytrade.com, and I do my weekly market commentaries, and I really trade, and as you know, in large amounts. So it isn't, I don't do this stuff just for people. I do it for my own trading as well.
So when you started doing these cycles, this is just all your homework, and then you put these, you know...
This is all original work. I've developed my own indicators over the last almost 60 years that are fundamental, technical, and combining those together into a strategy, a systematic strategy to say, we want to be a buyer down here, we want to be sellers up here, based on stuff that usually is forecast the markets really well.
Great stuff, Larry. All right, everybody. Next up, we will hear from Dan Hodgman with Top Steps Moment of the Week. Stay tuned.
Why trade futures with Tradestation? You can trade over 80 products from home, work, or on the go with a powerful, easy-to-use interface and prices that let you focus on padding your wallet, not emptying it. Upgrade your trade at Tradestation.com.
Welcome back, everybody. I'm now joined by Dan Hodgman. Dan, what's Top Steps Moment of the Week?
Anthony, this week is really exciting. We get to talk about big money. It's so common when we're looking at futures trading, especially when we're day trading, 1 lots and 2 lots. We're not seeing those big few $1,000 trades. Well, today, one of our funded traders, Vladimir out of Dubai, a few weeks ago was able to take advantage of a really big downside move in crude oil. It was right around the time that we didn't really know what was going on. The market started to move. There was a tweet that came out that said something along the lines, we're making a deal with Iran, and Vladimir had it pretty much set up. He was waiting for a downside move. The market, as we can see here, looking on the daily chart, the market started to accept right below a long-term resistance and support line. What we know is once that market breaks through a resistance line, it becomes support. Well, it broke through finally. We also have an uptrend market that the market was starting to test below that trend line. He was looking for a nice move. What's so important, though, if you're looking for those big moves, we always got to think about where's my out? What am I looking for? He found a really nice, again, support resistance line right around $58, and he was able to start to find an opportunity and framed out his trade. When we look a little bit closer here on the hourly chart, we start to see that this market is looking towards the downside. We're starting to make those lower lows, lower highs. Last time the market tested above a little short-term trend line here, it gave a really nice sell-off. And that for Vladimir was his sign of this is what I need to look for in today's trading. He went ahead and got short 3 contracts right around 58.986, right around that resistance level. His stop was extremely tight here. He looked just on the other side, up just over $60 for a stop, and was able to sit in that trade, and he let it run out and got out of there at 58.08.
Props to Vladimir. Great setup. A few questions.
Absolutely.
One, is this his typical strategy? He looks at the daily chart, looks for support and resistance, then moves to a 60-minute chart?
Yes, we try and teach a lot of our traders that. Take a look at that daily chart, get an idea of what the higher time frame is showing to help kind of frame out exactly what you're looking for.
So once he looks at that daily chart and then he goes to the 60-minute, is that his next
And that's
level?
that's all he's looking for. He's trying to keep it simple for himself. And he's just trying to manage that risk. Where are my asymmetric opportunities? Where's my risk going to be little, but I got some big reward? He actually took a couple opportunities throughout this day as he was trading those extremes and finally got the great setup he had been looking for all day.
That was going to be my next question. Is he somebody who's gets in and holds? Because, you know, if this is typically, you know, the type of trades he's looking for, these bigger moves, mentally you're set up for it because you're ready to hold. But if you're intraday trading a lot, and it's hard to all of a sudden say, I'm going to hold on to this one.
Absolutely, and absolutely. That's why we were looking here. Where do you look when you have a big downside move? I've talked about measured move before. I love the idea of a measured move. I talk with a lot of my traders about them. He found the last time that market tested the resistance up above, when it sold off, he was able to use that as his measured move and said, you know what, I see opportunity to the downside here. Let's see how it does.
A question I get from everybody all the time is, Anthony, how do I hold on the trades longer? I wish I knew that answer, but I'm going to go to Vladimir. And did he trail his stop? Like, how did he grind through that whole move?
Once the market, let's go back here. Once the market started to test that lower support line on the trend, that's when he started to look, bringing up his stop and getting a little bit, all right, where's this going to really go? Am I going to make it all the way down to my profit? Let's make sure we lock something in before it gets all the way down there.
Love it. Great stuff.
So just a couple lessons in execution this week. Obviously, trend is your friend. Take advantage of that trend. When the market is going, let your winners run. Stay in it. Take advantage when you have made that great entry point. Always, we say it every time, know you're out. Where am I getting out, whether I'm right or I'm wrong? And then lastly, the more defined you are in your trade, the more opportunity you're going to be able to make money. If you're just wildly throwing one on here and there and you don't really have it defined, you're going to struggle. But when you really frame it out and you have your risks set up and you know exactly what that plan is, you're going to be able to execute a lot better.
I love this setup. Props to you, Vladimir. Way to grind it out and to adapt to the conditions of the day.
Absolutely.
Lot said about that. All right, everybody. Great stuff as usual, Dan.
Thank you.
Next up, Dani Sittloh will join us to talk about what's on her radar using Wazzabull. Stay tuned.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit learnfuturestoday.com to see what adding futures can do for you.
Welcome back, everybody. I'm now joined by Dani Sittloh. Dani, what's on your radar?
Hi, so today I have two markets, same strategy, same indicator, the S&P and Nasdaq. You ready?
Yep.
Okay. All right. So the strategy is red sky momentum, going with the trend. It's a bearish alert. E-mini S&P crosses below the 20-day moving average. It's a 5-hour outlook. Okay. So short term, right? 58% chance it'll hit the lower target. 42% chance it'll hit the upside target.
All right. So 58% chance lower, 42% higher, and I say this all the time when we talk about moving average alerts. What I like about these alerts for day traders, 5-hour outlook, and gives you a percentage, good confirmation. You and I aren't trading off of moving averages, but we like to see when they cross them some statistics to support where they think they can go, lower or higher.
Exactly. And at the same time when this alert came out, our friend, the Nasdaq, came out with the same alert, same strategy, same alert, same indicator, right? Same strategy, red sky momentum, same indicator. It's a bearish alert. It crosses the 20-day moving average. Same hour outlook, right? So 5-hour outlook, 61% it'll hit the downside target, 39% chance it'll hit the upside target.
I mean, we talk about this all the time on Twitter, in the podcast, on this show, confirmation. When you have correlating markets crossing through any indicator or anything that you're, at the same time, you could have a bigger move. So you have both the Nasdaq and the E-mini S&P crossing below the 20-day moving average, and both of them had, I don't remember what the S&P's percentage was, but it was
Similar.
high 50s, right?
Yep.
And this is 60%. So now you have this confirmation that there's a pretty good percentage we're going lower, and and if it doesn't, the percentage is for higher.
Right, and what I like about it is they both came out at the same time. There are the upside targets, there are the downside targets, and when they're out of sync with each other, that's what I'm looking at as well, right? So if one is slower to react from the extension of the move, or if there isn't an extension of the move, the other one reverses, I'm looking at those pricing, right?
Yeah.
Those targets. I mean, it's great information. It's backed by statistics.
Yeah.
Can't go wrong.
Well, yeah, especially when one of them may hit it and go through, it might be a leading indicator that the other one may hit. And if it doesn't, that's an edge too, everybody, right? It doesn't necessarily always have to be, well, if X happens, X will happen. Either way, information with these types of percentages is, I think, something you could utilize as an intraday edge.
Absolutely.
Great stuff, Dani. Thank you.
Thank you.
Next up, everybody, in Beyond the Charts, Kate Lemere tells us how to create motivation through discipline. Stay tuned. Hey, everybody. Thank you for tuning into the show. To learn more about the charts I use, Wazzabull alerts, the basics of trading futures, and how you can even get funded to trade futures, please visit anthonycrudele.com. Now let me take you right back to trading futures. Welcome back, everybody. Larry is still with us, and we are now joined by fitness expert Kate Lemere. Kate, thank you for joining me.
Hi, thanks so much for having me.
Kate, you have a unique way of looking at two words that are used a lot in the trading industry.
Yeah.
Motivation and discipline.
Absolutely. I think motivation is absolutely misunderstood. And often we give it so much credit as being the driving force behind a lot of our goals, when in fact it's cyclical. It ebbs, it flows, it surges, it fades, and therefore is fairly unreliable. However, I think discipline is the true driving force behind our evolution and progression. And having the ability to act regardless of external circumstance, weather, mood, situation is the real muscle to flex in order to get to where you want to go.
For all the traders out there listening to this, what's the first steps that they can take to start thinking this way?
Taking a goal and unpacking it down to its most tactical level and getting as granular and specific as you can be. There's so much more to goals than meets the eye. It's really not just about losing the last 5 pounds, right? It's about implementing a fitness protocol, a nutrition program, managing sleep and stress, and then finding the time for execution of all of the above. And the more specific you can get, the greater your foundation for success. You can anticipate exactly what it requires to get you to where you want to go. You know exactly what it takes, and you're prepared to execute and move forward.
Something you talk a lot about when you and I were in the green room talking about what we were going to discuss today, you said, Anthony, taking advantage of small opportunities.
Everything, thinking opportunistically about everything in your life really helps identify and achieve like small wins that help us feel so good, that contributes to that motivation, whether that be drinking more water or getting up and getting to the gym. Small choices, good choices, breed more good choices. And it's a huge domino effect, and it's often easy to write off small opportunities or small decisions when in reality, they have the opportunity to be monumental on the back end.
I love when Kate said that, because I thought about me as a trader. Good decision making is contagious. Bad decision making is contagious. So
absolutely.
Move the dial from, I've talked about this on Twitter a lot, instead of 1 to 10, 1 to 2, just make that small, like you said, opportunity.
Absolutely. Small and steady wins the race.
Exactly.
Less chance for burnout.
Larry, I got to go to you. You are 77 years old, and you recently just participated in the Big Sky, what was it, state
Montana,
games?
Big Sky State Games. It's a track meet that the state of Montana holds every year. Fortunately, they have age divisions. In my age division, 75 to 80, I'm 77. I won every event I was in, but I also took last place because I was the only guy that age. But it was fun. I did the 60-yard dash, 100, 400, and the high jump.
That's
I've been learning
amazing.
to high jump, which is, at my age, you don't high jump very much. But it's
Longevity.
a great experience. Well, I mean, one thing we know about the markets is wealth is not health. What's more important, wealth or health? I've had a lot of very wealthy friends, billionaires, die, and they've always said, I would give you one day, I'll give you all my money if I have your health for one day.
I
So
love that.
ultimately, health is a lot more important than wealth.
What a great perspective. I'm going to take that with me.
Please do.
Yeah, 57 years you've been trading, Larry. When did you start to focus on fitness and diet?
Fitness when I was probably 9 years old and started boxing. Got beat up all the time. I had to get in better shape, and I was always been involved in athletics. Played football in college. But later on I went through every diet thing you could think of, and finally I realized, my dad had the great wisdom. He said, Larry, all this crazy stuff you're doing, just anything in moderation.
Absolutely.
Just don't go to these extremes and find out I think everybody's body is different. People respond differently to food, to workouts, to exercise. And you find the shoe that fits you, and
Absolutely.
then that's where you go. That's your path.
The best method is the one that works for you, not anybody else.
Yeah.
I love that. Kate, back to you. Talk to us about Barry's and the 4%.
Barry's is a global gym that started in 1998, and it really was the first boutique fitness studio. So it kind of started this multi-billion-dollar industry, and I'm so lucky to be a part of it. I'm a Chicago founding trainer, as well as a member of their corporate marketing team. They have 2 locations here in Chicago, and then 59 across the world. It's high-intensity interval training, treadmill running, and strength training, and it really is an incredible energy. You can't beat it.
And that's the type of exercise that you primarily do, fitness?
Yes, absolutely. I love it.
Awesome. Where can people learn more about you and Barry's and the 4%?
So of course we're all over Instagram, and then I own a website called The 4%, which is really a platform for fitness and nutrition information on the most basic level, not overcomplicating, really unpackable articles, and you can find it at www.the4%.com.
This was awesome.
Thank you so
Larry,
much.
Kate, thank you so much for joining me today. Hey everybody, thanks for tuning in today. You can catch all the episodes on anthonycrudele.com, and you can follow me on Twitter and Instagram. See you next time. All right, let's see if I can hit it.